In this video, I'm going to show you what the data actually says about the perfect retirement age, not the American data that every other video cites, but the true Canadian data. Then I'm going to show you the one factor that nobody else is talking about that might change how you think about this decision entirely. So let's get into it. If you search the perfect age to retire on YouTube, you're going to find dozens of videos and they're going to say roughly the same thing. They cite American studies, they give the same 3-pillar framework, and they arrive at the same conclusion. It depends on you, which is true. It's just not helpful because here's what none of those videos actually account for. In Canada, the retirement system is fundamentally different. We have CPP and OAS instead of Social Security. We have RRSPs that convert to RRIFs with forced withdrawals. We have OAS clawbacks that punish you for having too much income. And all of that, it creates something that doesn't exist in the US system or the American system, a specific window of time between when you stop working and when the government starts forcing money out of your accounts. A window where your tax rate is the lowest it ever will be. And every year you work past the point where you're financially ready, it's a year of the window that you actually lose. Section 2, the golden window nobody talks about. Every video on this topic frames the perfect age as a lifestyle question. Are you happy? Are you healthy? Do you have purpose? And these things absolutely matter. And I'll get to them in a minute. But in Canada, there's a financial dimension to this question that changes this math entirely. And it comes down to something I call this golden window. And here's how it works. When you're working, your income is high and your tax rate is high. So the moment you stop working, your income drops and your tax rate also drops with it. Now, eventually, your income is going to climb back up again. CPP kicks in. OAS kicks in. And at age 72, your RRSP converts to a RRIF and the government starts forcing money out of your account every single year, whether you really need it or you don't. So those forced withdrawals stack on top of your CPP and they stack on top of your OAS. They push you into higher tax brackets and can trigger OAS clawbacks that take your money right back. But that gap in between from when you stop working to roughly age 72 is the lowest your tax rate will ever be for the rest of your life. And that gap is incredibly powerful. So during that window, you can pull money out of your RSP at 15% or 20% tax instead of the 35 or 40% that you're going to pay later when everything else is completely stacking on top of it. So you can shift that money into your tax-free savings account where it grows tax-free forever. You can delay your CPP and OAS so they're permanently 36 to 42% higher when they do start.